I had $1,000 in my bank account, felt like I had $1,000. Would take my guys out for drinks and appetizers. We'd go spend $500, put it on the business credit card, not worry about it because we got money in the account. And then, payroll time comes, or time to pay off the paint store bill, and all of a sudden we don't have enough money for bills, right? And I'm sure you've been in the situation before, where you feel like you have a lot of money, you got a big number in your checking account, you got, feel like you're flush, but then bills start coming in, and you don't want to pay those bills because you realize you don't have enough money to cover those bills.
Welcome to the Painter Growth Podcast, where we help you scale your painting company in record time. Join us as we explore sales, marketing, hiring, finances, leadership, and more, everything that you need to know to scale and grow your painting business. I hope you enjoy and subscribe.
What's up, everyone? Mike Hickman here, founder of PainterGrowth.com, and you're listening to the Painter Growth Podcast. And if you're watching, I'm in a different setting. I'm at my new house. We're currently moving, not in the studio right now, so apologize for the audio quality, just recording these on my headphones. But you're going to want to put up with the audio quality on this one if you like money, because I'm going to take you through a couple of small lessons here on how you should be looking at your money, how you should be using money, and a few foundational financial principles that you need to know in order to grow as a successful business owner. Now, I've made some huge problems, some huge mistakes with money in my past. The first year running my painting business, I think we ended up doing about $600K for the year, but I didn't save any money for taxes. I used my business checking account basically as a piggy bank. I had $1,000 in my bank account, felt like I had $1,000. Would take my guys out for drinks and appetizers. We'd go spend $500, put it on the business credit card, not worry about it because we got money in the account. And then, payroll time comes, or time to pay off the paint store bill, and all of a sudden we don't have enough money for bills, right? And I'm sure you've been in the situation before, where you feel like you have a lot of money, you got a big number in your checking account, you got, feel like you're flush, but then bills start coming in, and you don't want to pay those bills because you realize you don't have enough money to cover those bills. Now, that's not because you're not producing jobs profitably, but it's because you don't understand cash flow cycle and how to manage your finances effectively as a business owner. So I'm going to walk you through a few financial principles that you should follow and understand in order to be a more successful business owner, be able to scale and not be scared to pay every bill. There was a time in my previous painting businesses, as well as this business, where, a bill would come in and I would not want to pay it, right? Because oh man, that's going to hurt so bad to pay that bill. And I only have this much money and this money's going out. But the better you understand your financial position, the less that you're going to care about those bills and the money going out, because you're already going to know and have accounted for and have foresight into, okay, this money is already spent, whether it's on marketing or on production or on paint or on labor or whatever you're spending money on. That money has already been spent even before it's been spent, before it's been spent, even before the money leaves your account, even before you incur some of those expenses, it's been spent. So you need to understand, I'll explain what that means. You need to understand your finances on an entirely different level, in order to get to that position where you feel completely in control of your finances. Now, what you may do, how you may run your business, and this might not be everybody, but some people, some of the clients who come into our program initially, they run their business like this and we help them move away from it. But you tell me if this is you, or you just think about it rhetorically. When you look at your bank account, you log into your bank on your phone, whatever bank you use, and you look at how much money is your bank account, do you feel like that's how much money you have? Right? Probably some of you is like, yeah, I do. And then when you need money from your business, do you just transfer a bit of money into your business, into your personal account? Right? Or bills are going to be a little bit higher this month, I'm going to take out a little bit more money, right? You kind of treat your business bank account as your piggy bank. If so, really not a great way to do business. We need to get away from that. We need to help plan, understand your financials, understand cash flow, understand gross margin and net margin. And it's not as hard as you think. A lot of these concepts you're going to be able to wrap your head around pretty quickly. And I want to help you do that. I want to try explaining it as simply as possible so that you can understand it and so that you can have a better understanding of your financial framework, have a better understanding of just how money works and what the money coming in and out of your business is and what it means. And then just feeling better overall about your business, about where it is financially. Okay. So First thing that I want to talk about really quickly are just types of expenses. Okay, so in business, in all business, but specifically in painting, there's fixed costs and there's variable costs. And if you already know this, that's fine. You don't have to listen to this, but I would say listen to this anyway. We're going to get a little bit more complex in terms of what we're talking about today as we go, but we're going to start pretty basic. So we have fixed costs and we have variable costs, or fixed expenses and variable expenses, whatever you want to call it. Now, a variable expense is something that changes in direct proportion with the service being provided. So if you sell $1,000 of, if you sell $1,000 paint job, on average, about 35% of that is going to be labor, and 10 to 15% of it is going to be paint, leaving you with about 50% left over as a gross margin. Okay, and so at 35% on $1,000 job is $350. But if you sell $10,000 worth of paint jobs, that 35% is now going to proportionally go up to about $3,500. So you sell, whatever amount you sell, on average, you're going to be about that 35% labor and about that 10-15% paint. And they might vary 5 to 7% either way on those. But on average, those are going to go up in direct proportion with how much you're doing. That's called a variable expense. And in a painting business, the main two variable expenses that you have is paint and labor. Now you could make the excuse, the argument of, oh, but if we produce more work, like fuel is going to go up because we're going to be driving around more. And while yes, fuel will go up while you increase production, while you do more jobs and things like that, fuel is still considered a fixed expense because it's not directly proportional, right? It might be correlated, but it's not directly proportional, just a small difference. So the only variable expenses you want to focus on or you want to think about that are variable are paint and labor. And what you want to do ideally is to leave about a 50% gross margin or gross profit margin. So 50% of every job should be directly allocated to paint and labor, and you should have about 50% left over as gross profit. Now, when I'm talking about profit, and even a lot of different numbers, you use two different terms, gross and net. So what are the differences? Gross typically means before expenses, and net typically means after expenses. So when you say gross revenue, that means total revenue before any expenses at all. So if you produce $1 million in a year, your gross revenue is $1 million. Gross revenue is pretty synonymous with sales. The difference is the production. I guess there's some small differences in definition if you want to go down that route. But let's just say, for argument, the difference between gross and net: gross is before expenses, net is after expenses. So gross revenue is total, everything produced. Then gross profit is after your variable expenses. So you have your gross revenue minus your variable expenses equals your gross profit. I hope you're following me. If you're driving and this is too much, I'm sorry. We just have to learn finances, and it's going to take a little bit to learn. So you might have to listen to this a couple of times if this is all new to you. Okay, so now that we have our gross profit, which is hopefully around 50%, and if you don't know what your gross profit is, this is where you need to start doing job costing. So job costing is essentially getting a spreadsheet and tracking every single job and getting your revenue, putting in how much you spent on paint, putting in how much you spent on labor, and getting how much you have left over. I actually have a job costing spreadsheet that you can use if you're listening to this and you're not costing your jobs. I'll put a link below this where you can get free access to the job costing spreadsheet. You'll have to give us your email and phone number, but you'll get access to that job costing spreadsheet. It's an incredible spreadsheet, and highly recommend you use that. Anyway, so as you're costing your jobs, you're going to see if you're at a 50% gross margin. So now that you're at 50% gross margin, you see that, okay, I produced $30,000 this month at a 50% gross margin. That means I have a $15,000 gross profit, right? Half of 30,000 is 15,000. So I'm at $15,000 gross profit. Now what I need to do in order to find my net profit is I need to subtract my fixed expenses. Okay, what are my fixed expenses? Well, my fixed expenses are all of the other expenses in the business that are ongoing, that are going to be more or less the same month after month. And you should have some sort of business budget that you can follow to see on average what your fixed expenses are. You're going to have things like gasoline, vehicle insurance, vehicle payment, possibly a storage locker, your insurance, your I don't have a list in front of me right now, but your marketing, your Facebook ads, if you're in Painter Growth, your Painter Growth coaching, right? So all of your fixed expenses should add up to a certain number. So if you're a smaller business, maybe it's 5K a month. And also like any fixed labor that you have, like if you have an admin assistant or if you have a production manager, all of that will fall into fixed expenses, unless you pay your production manager as a percentage of what they produce, in which case that would be variable. But in this argument, it would be a fixed expense. So say you produce 30K in a month, $15,000 or 50% gross profit. So that means you have 15,000 in gross margin left over. And say you have a $7,500 per month overhead, Facebook ads, car insurance, admin, things like that. You pay $7,500 per month for that. Then what that leaves you left with is $7,500 per month in net profit. So net profit is now how much money do you have left over at the end of each month? Ideally, you're looking at this at least monthly. How much net profit, how much total money do you have left over at the end of the month? And now you can spend either as a salary for yourself or to reinvest in the business and add as retained earnings. So what I recommend doing, especially if your business is still below $1 million per year, I don't want you to factor in your salary until you figure out net profit, right? Because as a business owner, we get paid last. Everyone else gets paid first. Our painters get paid first. Our employees get paid first. Our creditors get paid first. Everyone gets paid first, and the owners get paid last. So figure out what your monthly profit is before your own salary, and then from there you can determine what your salary should be, right? So what I typically did, and now we're going to get into the next phase of this discussion, where we're going to talk about financial statements and the importance there, because a lot of the times when I talk about financial statements with painting contractors, eyes glaze over, and just people leave their bodies because they don't want to listen to it. But man, financial statements are so important, and if you don't understand a couple of these really important financial statements, then you're doing yourself a disservice, and you're actually going to be leaving a lot of money on the table. Now, the first financial statement that I want to talk about is your profit and loss statement. Now, your profit and loss statement, I would recommend looking at a monthly basis. And how it's structured is you have your total revenue at the top. And in a painting business, you're typically going to be cash-based accounting versus accrual-based accounting. So cash-based accounting, your revenue is going to be how much money came in. You're going to have your variable expenses, so how much money went out for labor, how much money went out for paint, and then essentially at the bottom, and then your then your net profit, and then your fixed expenses, your gross profit, fixed expenses, and then net profit at the end. And at the end of it, it's ultimately going to say how much profit did your business make this month. Okay, so by looking at this, by looking at your profit and loss statement, sometimes people will call it an income statement. Income statement, profit and loss statement are the same thing. By looking at this monthly, you're going to be able to see how much money your business is making every single month. Now, you got to be careful because it doesn't quite tell you everything about your cash flow position at this time. But if you just look at one statement every single month, you should be looking at your profit and loss statement. Okay. If you have a bookkeeper, use them and say, hey, Mr. and Mrs. Bookkeeper, can you send me a profit and loss statement whenever you close up books each month, like within the first week of the month for the previous month. So, by August 8th, you should have July's profit and loss statement that you can start looking through. How much did you produce? How much did you spend on paint? How much do you spend on labor? What was your gross profit? And then how much was overhead? All the individual line items, how much was net profit? Okay. And if you start looking at this on a month-by-month basis, just this statement of cash flows, sorry, not the statement of cash flows, just this profit and loss statement, you are going to immediately be able to start working on your business in a lot more effective way. Because you can see, oh, last month we were actually at 42% labor instead of 35. Like, okay, let's figure out what happened there. Or, hey, last month we were at, 17% paint. Let's see what happened there. Oh, last month we paid $2,000 for, whatever the software, and like we're not even using it. Okay, well, what are we doing there? Because there's something that we can do. And you're going to be able to get this higher level aspect of looking at your business and give you the ability to work on your business more. I think a big fundamental issue mistake that a lot of people make when working on their business or looking at their painting business is that they believe they're in the business of painting. Well, you're not. You're actually in the business of running a business. And when you want to become a CEO, you need to take the role of a CEO, a CFO, and look at the business fundamentally from a financial perspective. And it has to all work out from a financial perspective. And if your business isn't working well from a financial perspective, you're going to lose money and you're going to feel broke all the time and you're going to feel stressed. You're going to be reactive. But if you want to be in that position of strength where you're not scared every time a bill comes in, you need to start looking at your profit and loss statement every single month. Now, the one other statement that I would recommend for if you want to get slightly more advanced, I mean, if you got, if a handful of people after listening to this episode reached out to me and said, hey, because of that episode, I'm starting to look at my profit and loss statement every month. I set up an automated system with my bookkeeper where they're just sending me my P&L every single month within the first week after they reconcile the month. If a handful of you guys do that, heck, if one of you does it after this, I will feel I have won. I will have done my job because I know that your business will be in a much better position in 6 months from now if you're looking at that every single month and you're not treating your business as a piggy bank. Okay. But the second statement that you need to learn is your statement of cash flows. Now, what is the difference? Statement of cash flows reconciles or basically compares itself to your bank balance at the end of the month. And bank balance and net profit doesn't always add up because there is time delay within some cash flows. If you have an accounts receivable, if someone owes you $10,000, then technically you've made that $10,000. But your statement of cash flows isn't going to say that you have that $10,000 yet. And I just decided that I'm going to tell you about a third financial statement. If you know all three of these, you will be in really great shape. So your statement of cash flows doesn't equate your accounts receivable and your accounts payable. It just says how much net cash came into your business over that last 30 days. Cool. The third one, this is our coach Jesse's favorite financial statement to look at. My favorite is profit and loss. His statement's a balance sheet. But the balance sheet basically tells you a current snapshot of your business. It looks at how much cash you have. Okay. So a balance sheet is broken down into 3 sections. You have assets, you have liabilities, then you have shareholder equity. So your assets is how many assets your business has in a numerical way that are liquid assets. So you have cash equivalents, so like investments, and accounts receivable and an inventory. So cash, how much cash do you have on hand? How much accounts receivable do you have on hand? So how much accounts receivable is basically people who owe you money. Cash equivalents, so investments, and inventory. So you add up all of those things, and those are assets. Some people will put less current assets on there, like plant, property, and equipment, but you're not going to sell your truck, so you're not going to put your truck on there or anything. So just put your current assets. And then those are all going to add up into your total assets, right? So that's how much your assets have. And so it's different here because it has your cash equivalents, and your accounts receivable, which the other financial statements don't cover. Now, under your assets is now your liabilities. So your liabilities means what do you owe? What are you liable for? So this is going to be any debt that you have, any accounts payable, so any bills that are due right now or within the next 30 days, and any work in progress that you have. So you're going to take your assets and it's going to subtract by the liabilities. So say you have $100,000 of assets and you have $50,000 of liabilities, so you owe $50,000. Then you're going to get your shareholders' equity, which is assets minus liabilities equals shareholder equity. And that's what you have left. Shareholder equity means how much do you have left? How much equity does the shareholder have? So you take your assets, say it's 100K, you subtract it by your liabilities. So now which is 50K. So that means you have $50,000 left over as shareholder equity. So essentially that's how much the business is worth, or at least has in terms of assets, net of liabilities. So we went through your profit and loss or your income statement. Okay. And so that is ideal for looking at a month-to-month snapshot of how the business performed. Okay. Then you have your statement of cash flows, which tells you how much net cash your business has that month, either gain or loss. And then you have your balance sheet. So those are 3 financial statements that I recommend you learn a little bit about. And learning a little bit about them is only as valuable as how much you actually use them. So I recommend actually taking some time, sitting down with them, watching some other YouTube videos on these 3 financial statements and how that you can use them within your painting business. Then the last thing, going back to how you have your bank accounts and your salary set up. So while your business is small, you're going to be taking a dividend. And so what a dividend is basically like a shareholder withdrawal into your personal account. And I would always recommend not taking just like, if you're going to be taking a dividend, just take it once a month. Decide when you're going to take that. Ideally, after you get your profit and loss, you can decide what your salary was that previous month. If it's going to be 5K, if it's going to be 8K, if it's going to be 10K. You want to leave some money in the business so that you can keep paying those expenses, especially if things slow down. Ultimately, you want to get the cash in your business up to about a 3-month runway of all your expenses. So if you're at 100K a month in revenue and your expenses are about 70K a month, then you'll want to save up about $210,000 in just business savings. We call that runway. In case things do go south, you have that cash flow to be able to float things. On a smaller level, if you're doing 30K per month and your overhead is 20K on average is what your total cost is, then you want to save up about 60K in terms of runway to really save your business, to make sure that you've got that runway and you're not going to be shutting down anytime soon. Now, how you want it structured is you want a business checking and a business savings account. Okay, you want 2 business accounts, and then you want a personal checking and a personal savings. At least that you can get a lot more complicated than that. And as you're small, less than $1 million, you're going to be taking a single shareholder withdrawal once a month after you get your profit and loss. It's like, okay, the business made 10K in profit last month. I'm going to take 7K. I'm going to leave 3K in the business. I'm going to take 7K. And so I'm going to withdraw $7,000 from my business to my checking, my personal account. And that's going to be the only time I move money from my business to my personal in the month. 1 transaction per month. And then what you need to do is you need to figure out what your effective tax rate is going to be about in your area, in your state, in your province, and whatever, and take approximately that much and put in your business savings, right? Or you can have a specific tax withholding account that you don't touch. So if you take out, I'll just keep it simple. If you take out 10K for your monthly salary, take out about 3,500 of that or 4,000 of that and put that in your savings account right away. And don't touch that. That's for taxes. That's not your money anymore. And because you're taking just a salary, a lump sum salary, you need to take that money and you need to put it aside, or else you're going to be screwed later on. And you do not want to owe the government money at the start of your next season. That's going to put everything way back. Okay. As you grow, once you become $1 million plus business, you're going to be able to move to a salary. So in the States, you're going to become a W-2. In Canada, you're going to become a T4. So in my business here at Painter Growth, I started this year, I became a W-2, well, T4, but basically a W-2 employee. And I did too late. I could have done it a lot sooner, but I decided because the business is in a place where we have a stable cash flow, and I wanted my salary to come out of the profit and loss. The main reason why I became a W-2 is because I wanted my salary to come out of the profit and loss statement above the profit line. So now I'm in the labor section of our business. We're a little bit different because we're not production related, right? We're coaching and whatnot, but I wanted to get a net profit of the company after my salary. So that was the main reason why I changed, because we're big enough and we have the structure and stability enough that I know that my business is always going to make enough money in a month to pay my salary. And if it doesn't, we have sufficient cash reserves where it can pay that salary. So once you get beyond that level, you can switch to an employee. But as you're small, definitely take withdrawal once per month, but do not use your business as a piggy bank. Don't take 2, 3, 4 times in a month. That's going to just leave you confused, your bookkeeper confused. You're never going to know how much money you have. You're never going to know how much taxes you have to pay. Just take once a month and put a third of it in savings, and then you're going to be good. So we covered a lot of ground here today. I know this was a short episode, 23 minutes, and I talked kind of fast. So listen to it again if you have to. But we talked about bank structure. We talked about fixed expense, variable expense, gross profit, net profit, tracking. If you want a copy of this job costing spreadsheet, I'll have a way for you to get it in the description below this podcast, wherever you're listening to it. So thank you guys for tuning in. Appreciate you all for listening, and have a great day.
Thanks for listening to the Painter Growth Podcast. If you want to grow your painting business, go to www.paintergrowth.com or click on the top link in the description. Talk soon.